Okay, part 2, guys. We don't know what happened. Sorry. All right. So somewhere in here, I would get in. I'm going to draw it in a second so you can see it visually. But I want to try to explain the concept first of break and retest, what break and retest is. Break is, it breaks a level, price breaks a level, and then price comes back to retest the level. When it retests the level, that's when you get in. If it does not retest the level, you do not get in. Okay? Now, price right now is right here. It's in a process of retesting the level. Everybody see that? Mm-hmm. So it came down, it broke and closed this level, didn't it? Then it turned around and it came up, and it's in a process of retesting my sandwich zone. Right? Yep. Mm-hmm. It's just in that area. Now, the thing is, it could still come back up some or not. Mm-hmm. But that's why it's a zone. And you got to be okay with price being in that zone somewhere, anywhere. Mm-hmm. Right? Now, the other side to that, though, is we got a trend line right here. And then we got the level right here. So, is this price going to respect this trend line, or is it not going to respect the trend line? Well, you know, there's multiple different things you can do to confirm that, but just off the break and retest, right, I would probably still consider getting in on this as a sell, at least at this point, right now. Now, I don't have to stay in this trade forever, right? Mm-hmm. But I would consider if it hit my zone. And I don't know if it's fully in my zone or not, but I'll show you how to figure it out or not, right? It may be in my zone, and if I was in this trade, I might be in this trade right now. Not right now, but I'm saying if I were in this trade, I would probably be positive right now, right? See, because the price is still, even though it's green, it's still going down. Do you see that? It's still going down. It could come back up, but that's okay, because as long as it's within my sandwich zone, even if I go negative a little bit, Dana, I drove out the way a little bit to get to where I needed to go, I'm okay, because I'm making a calculated judgment based on what I know the market usually does in its pattern of repeat. Now, could I be wrong? Could the market do what it wants to do? Yes. Mm-hmm. But I'm not guessing, though. I'm saying that based on what the market normally does, I'm going to potentially enter this trade at that point.
Okay. Where at the
in my sandwich. See, it's still going down, right? It's bouncing up and down.
Yeah. Now, and I don't even know if I should ask this because I was watching a
Deja? Yeah.
A Deja. All of her.
She's awesome.
Yeah. And you know, I was watching her training, and from what I've learned is that you go to the lowest point for the pips. I don't even know if you want to get into that.
What do you mean, lowest point?
Like to calculate your
stop loss.
Yeah, your stop loss, your take profit. I don't even know.
Okay, that's once we decide to take a trade.
Yeah. Okay.
So we haven't decided to take a trade yet. We're analyzing whether to take a trade or not.
Right.
Okay. I'm not worried about a stop loss yet because I ain't even in the trade yet.
Okay.
Right? I'm deciding right now whether I'm going to get in it.
Okay.
So for example, let's say swipe trade sends a swipe trade out right now. And it says GJ get in for, I don't know, a sale. Let's just say it said that. Okay. Or a buy. Right? Okay. You can just go in there and copy and paste. Right? And on average, because swipe trades is usually on point, you would probably win just off of the averages of how well those master traders are sending out the signals. Okay. But what I do now is if a swipe trade comes out, no, Josiah, no, you got juice in this cup. Sit down right there and drink that juice. You're not getting nothing else. No. No high C. Okay. Right? So swipe trade sends out a trade, and the first thing I do is I go on my phone and I hurry up and I do what? I draw my trend line, I draw my fibs, and I see if it's broken a level or not. That's what I'm trying to do. Right? As quickly as I can. What's the trend? What's the fib levels? And is it breaking a level or not?
Okay. Very smart.
Okay? So it might say, get in at this particular price point. And then I look at that price point and I see if that price point is a level price or if it's part of my sandwich price. If it's within my sandwich price, and I believe, and I confirm, what you looking for? Josiah.
I don't want him to have it right.
Another accident.
Josiah.
Yes, Judy. Thank you for answering that question for him. It is from tradingview.com.
Thank you. Come on, let's pay attention. Come on now, listen, okay? You can sit it down right there if you want, and then when you get ready to be thirsty again, you can come back and get it, okay? Thank you. Good job. You're awesome. All right. So I'm coming to see break and retest, right?
Okay.
Then it says get in at this price. And if I can see what they see, then I feel like, okay, I'm getting it, right?
Okay.
It's how I'm confirming, because they're the master traders, right? And I'm saying, okay, if I can draw up my analysis and I can see what they see, then that's very good. But can you please sit it down right here? You're still not going in your room and drink. Put it down. No, sir. No. Did you hear me? What did I just say?
She said, put it right here, honey. Where you want to put it?
He's got his little cup holder on his desk, and he's now sticking the cup in the cup holder because he wants to go back in there and put it on the desk.
Okay.
And I'm saying no. On the table.
Just leave it right here and come back and get it. It's not up for option.
It's not an option, Josiah.
Yeah, mommy said no, it means no.
No, it's not an option. But how about this? I'm done discussing it. Put the drink down and go in your room, or you can stay out here and drink it. You can either way, but you're not going in your room and drinking it. Okay? So a swipe trade sends it out, and then they say this price point, and that price point is where I can see the price point is. I'm saying, okay, I got it, right? And I can choose to enter the trade because I can see what they see. But if I don't see what they see, I'm at the point now where I don't enter the trade. Not because I don't trust them, but because it's my money.
Right.
And I'm trying to learn to see it. And if I don't see it, I don't have to put my money up there.
Right.
Have you ever seen that it's gone the opposite of what they?
Sometimes.
Oh, yeah.
Okay.
Sometimes.
And then you'll go in on obviously.
Yeah, I go with, if I see something else, I go with me, because it's ultimately I'm the last decision maker on my money. Right? That's
Basically, the swipe trade is doing all this for you.
well, swipe trade is doing all this, and all you do is get a signal on your phone.
Okay.
And it says, GJ, sell, enter at this price, take profit at this price, and put your stop loss at that price. And all you do is go on your phone and type it in, and you're done. It's 3 seconds. You don't got to do all of this.
Okay.
That's the whole point. Swipe trade's job is to help you earn while you learn. So the master traders are doing all of this work for you. They send a signal to your phone, and you just put the trade in. That's it.
Okay.
And most of them you'll win. Some of them you might not win, because they're not 100%. They're human beings too. So but they have a very good success rate.
Yeah.
Okay. But the whole point is that because we're trying to help people learn this skill, because this is the freedom part of it. If you only depended on swipe trades for the rest of our lives, then the minute there was no more swipe trades, you'd be back to what you was doing before, because you still don't know nothing. And we're trying to help people not have to depend on a job or anything else. You learn this yourself, you're good to go. So swipe trade serves as that support functionality to help us, because we're brand new and most people don't know yet. So you get going, you start learning this stuff. Now you can start matching up what swipe trades is saying with your own analysis. If that matches, in my book, I take the trade. If it doesn't match, then I go with me, because I'd rather be mad at me. If I take the trade and I was wrong, then I know why I was wrong. Right? I saw something and I'm like, what? Then I go back, I can say, oh, I missed that retest. I saw this retest, I didn't see that retest. Right? If I'm right, then now it's confirming, okay, Trace, it's giving me more confidence. Right? So that's just my trading plan. That's part of my trading plan. all right, is I do what I feel based on what I can see at this point in time. And then even if I'm unsure, and swap trades are saying one thing and I'm seeing something else, even if I did enter it, I'm entering it with the low lot size, like 0.01. Right? Because even if they go wrong, and I'm like, I knew I was right, but at least I didn't lose much.
Okay.
Yeah, like I'm not gonna jump off the balcony with it, right? So I'm leveraging less if I'm uncertain. You want some more pizza? Okay, hold on. So does that make sense?
Yeah.
What I'm saying? Okay. So we consider this broke, and now we're in a retest period. Okay. Okay. Now this may or may not break this line because we've got a trend and we've got a 50% line right here, right? And we're in an uptrend.
If you put that on a 1 hour chart, would your line still stay there where you have them?
Yeah, my line gonna still stay because my line is my line.
Right.
See?
Okay.
So on the 1 hour chart, what did it do? It broke this level, right here.
You didn't retest.
It didn't retest. It just kind of went straight up right now. And then here it didn't retest either on a 1 hour chart.
Right.
The 4 hour is going to be a little bit more accurate, okay, based on that break and retest strategy. But ultimately it's going to be the same thing. So it broke here. Well, then that means the next time it's going to do it would be the retest. So that's what it did. It retest. See? So here it broke the line.
Right.
But it never came back down to retest the line.
Right.
Until here. Right? So that's retest number 1. Technically, that's retest number 2. Okay? Now, the rule of thumb is first retest, continue with the trend, which is uptrend. So you could buy, right, on that retest. Second retest, you can buy, continue with the trend. When you start getting into a third retest or a fourth retest or a fifth retest, that line is getting weaker and it might not be a buy anymore. It might break through and it might now start going the opposite direction. So when we're trading, we're looking for highest probability trades. Highest probability, okay? What's the greatest chance I have for this trade to go in the direction I want? Well, on retest 1 and retest 2. If it comes back and retests that line and you can look at it and it's retested that line 3 and 4 and 5 times, you might need to wait. Just wait to see what price is going to do. We don't have crystal balls, right? So what we're looking to do is to respond to price, right? And let the trade come to us. It needs to fit. But that's enough, Dana, because if it's too hot, you ain't eat. That's enough. Thank you. Oh, Dana, you have to give him a paper plate.
He went through 2 different places. He was like, no, I want this one.
Oh no, you can't. So yeah,
You already a mom or 3.
he played her.
Like, I want this one.
No, sir.
They don't get off.
He said yes, sir.
I'm gonna give you a go. I'm gonna
Careful.
draw you a bath in a minute,
You can sit right here.
so you can go to bed.
Here, let's scoot your chair over.
Okay, why don't you go get your drink? Just like that, so you can.
Get up there,
So
What do you know? No candy.
you put the sandwich. When you do the sandwiches, you do the sandwich on the 4 hour chart.
Yeah.
Okay.
I don't even know with this, I don't really mess around with the 1 hour, but I just want to answer the question.
Right.
No iPad while you eat. Ask her to get his iPad, please.
No. I mean, he can watch it, but he didn't even want to watch it. 5
No,
seconds.
that's what I'm saying.
Okay, so here's where we are. Okay, so you guys see what I'm saying, right? Okay. So now let me draw the sandwich.
Which is step 3.
It's 3B. A money sandwich. No, we like money sandwiches.
Yeah, we do.
Yes, you do.
Yes, we do, Josiah.
You have cheese on your sandwich.
The work.
It's called
Money
Gouda.
is called cheese.
It's called
That's not
Gouda.
cheese.
That's Gouda.
It's a cheese sandwich.
The best cheese.
Okay.
Maybe go with turkey sandwich.
Okay. So now, the best way to identify what we call true support and resistance, which helps us come up with our sandwich. I learned this from Orrin Wright. Shout out to Orrin, okay, because he saved my life with this one.
Okay.
It's very.
No,
Hey.
Mama said no.
Hey, eat your food. Stop. No. Okay. Yes. He's out here and I can't.
Yeah, I understand.
Both of them.
Miss Jerry, you hanging in there?
Yeah.
You see it? You got it?
Mm-hmm.
Okay. Cassandra, you okay?
Yeah.
Is it making sense?
Yeah.
Okay. Dana, making sense?
Very much so.
Huh? Okay, and I need you to turn this down because we're in here working. You understand? Do not turn it up. Okay. In fact, yeah, don't turn it up. Okay. So now what we want to do is remember, so like it can come up, it can come down below this line at a certain point, it can come to this line, or it can come up above that line. So we want to identify what that range is. Okay?
Yes, Lamar.
So that range, it's you. Remember I told you price seems to bounce in between certain areas.
Okay.
Right? So these are major support resistance levels. What we're going to do now is find some of the minor support resistance levels. Okay? So if it breaks a major level, it can still come back and hang out in a minor level. Right? But we need to identify those. So I used to have a really, really tough time identifying where the support and resistance is until Orange showed us this. So what we do is we come over.
Yes, please hit your share button. Share.
And this is, see right now we're looking at candles, right?
Mm-hmm.
We're going to change our chart over to a line chart. Okay? The line chart does not consider wicks. It's true price. Okay? So this is where the closed at. It closed, right? There's no wicks and none of that here. So now we're looking at little areas. So this is where price is right here, right?
Mm-hmm.
So now if you come over here, you can see price came here and it bounced down. You see that?
Mm-hmm.
Like a mountain peak.
Mm-hmm.
Right? It came here and it bounced back down. You see that? It came here, it bounced back down. It came here, it bounced back down. It came here, it bounced back down, right? So all these little areas of where price hit a level and bounced off, those are like some of those support resistance areas. Okay? Same thing if it is a V, essentially. Like see how this is a V, down and up? This is like a peak, this is a mountain, this is a valley. Right? Down, up. See right here? Down, up. Down, up. Right? But that line is there. Right? Up, down. Y'all see what I'm saying?
Mm-hmm.
Up, it hits a point and it drops. It hits a point and it drops. Or it hits a point and it bounces up. It hits a point or it bounces up. You see that?
Yeah.
Okay. So we're looking for those areas in which it does that. So I'm going to get a line. But I'm going to get a different color line. I'm going to get a pink line so we can identify it as different, okay? So price is right here, right?
Mm-hmm.
So where price is right now, you guys can see that dotted line going all the way across?
Mm-hmm.
See that dotted line?
Yep.
Yeah.
You see how right where it is? If I were to stick a line right there, it's pretty much on top of all of those peaks,
Right.
those mountains.
Yep.
Okay, so that is like the bottom meat of the sandwich.
Okay.
I mean the bottom bread of the sandwich. Okay? So now what we want to do is we want to get to the top. So now we're going to look for the same thing, right? Where does price come up to and bounce down? If we look left, we can see right here, price did that, right?
Mm-hmm.
It came up to this point, and then it bounced back down. Right here, see that?
Mm-hmm.
So you have to look left. Now if I keep looking left, I can see this pink line is almost right here too.
I bounced off of it almost.
Right?
Yep.
It's not gonna always be 100% exact, but it's roundabout. You guys get what I'm saying?
Mm-hmm.
Right? Even over here, almost the same, right? Right here, the pink line at the bottom. What is it doing? Bouncing off, right? Bouncing off. Okay, y'all see that?
Yeah.
Okay. So now we're back over here to where current price is. So this is now what I would consider my range. Okay? So just to make it a little bit easier to see, I'm going to have a rectangle right here, right? And what I'm going to do, I'm going to kind of draw this little area like this, right? Y'all see that? So pretty much anywhere in between there is my zone, right? I'm okay with that. So now I'm going to come back over to my candles, right? Now that's my zone. So if price goes anywhere in that zone, technically on break and retest, right, I could enter for a sale. I could. But I have to keep in mind that I've got a 50% line right here and I got a trend line right there. So it might not break down. It might continue to go back up, right? Now, here's something else to help keep in mind. Do you guys first understand what I'm saying though about that?
Yes.
Okay? This zone, right? Anywhere in there, I could enter my trade. Anywhere in there. It's not exactly this point, that point. So sometimes what happens, swipe trades comes out and I'll draw my zone, and sometimes depending, because different traders see different things, right? Sometimes the trader might have this top part, this top price. And it might be, like this says 0.429, it might say 0.435 or something. It's the same. It's one pip, who cares, right? I'm like, okay, so they're seeing it at the top of the zone. Like, okay, I'm still okay. Another trader might come and put it right at that white line. Okay, same difference, right? Another trader might come in and say, okay, this line right here. Okay, right? Now Christopher Derrick, in his analysis, he doesn't care. He said, like if we're going down, right? We're in a sale, for example, and this is retesting going up. Chris Derrick gets in right here at the bottom of the zone. Because he doesn't want to, he's like, I'll get in at the, as soon as it hits my zone, I'm in. Okay? Now, if it continues to go up through the zone, he goes negative for a little bit while it's doing that. Okay? But he's okay with that. He don't care, because based on his analysis, his projection is gonna turn around and come from what he may have come up with. Okay? So he comes in right here. Now for me, I don't like that the thing starts going red sometimes. Right? I just realized that. They can't. So what I started doing is saying, okay, since I know it's the zone, and more times than not, it comes to the top of this zone. What I've noticed is that it usually can, at some point, it comes through, it either comes back to this line or up to the top. Right? Now, if it doesn't come back through there, I can still get in on the way back down. Right? But I usually will set a pending order where I will say, okay, at the top, so this is 148.429. I might come in here and set it for a sale. If price gets up to this line, give me a sale. Right? Then I believe it'll probably pull back down, pull back down, pull back down, pull back down, maybe at least to the 50% line. Not forever. Right? If I'm like, well, I'm not sure if it's going, whatever, right? But I can see right here that it broke through, right? It came down, it retested once, right? So this might actually be a buy, right? Because the trend is really going up, but the break and retest is going down. But if I combine all of this together, this might be the perfect entry for a retest on the buy, because why? It's the first retest.
Right. So buy seems more. A
buy seems more reasonable, right? Because why? First retest is a strong
signal,
a strong probability he's going to continue in the trend. A second retest is a strong probability in continuation of trend. Once it gets to the third and the fourth retest,
wishy-washy.
Wait a minute now. It's a little bit more, maybe, 50%. I don't know what the percentage is, but it's not like 80, 90%.
Gotcha.
Right? So this is a strong situation for a buy. Now, because it's a strong situation for a buy, you could enter, like, so sometimes you might see where it says market execution,
Mm-hmm.
right?
Like get in right now.
Get in right now. Why? Because, well, maybe because, you know, you're getting at the bottom, right? But, no, drink the juice in the cup.
Said it did.
He did drink the juice in the cup.
Okay.
Okay, you see what I'm saying? So now this is a retest. Okay, man, I might get in for a buy. So this might say market execution, right? So now what would I have to do? If I'm going to get in for a buy, I need to see if this thing is going to come down any further now, right? Because, please go sit down. Wait for a minute. Sit down like I asked you. Then, so, because it came down here and retested, right? So it could come back down and retest again. We don't know 100% what it's going to do. But what I would do is I would draw another zone. You guys see what I'm saying? I would draw another sandwich down here to give me an area of where it potentially could come down to before it bounced up and went all the way back up. It could bounce up right here. Right? It could. We don't know. All right? But that's where we are. Okay? So hold on one second. Because technically, we would have wanted to catch this over here. Because this would have been the first retest for that. You guys see that?
Okay, where would you want to get in? Where?
Ideally, we would wanted to get in over here.
Okay.
As soon as it touched that and that level,
yeah.
boom.
But we didn't catch it then. Remember, we didn't pull this chart up
Right.
until this 4-hour candle was already. That's what happens
Right.
sometimes, right? You might have missed the entry.
Mm-hmm.
So that's what they say, no retest, no entry. Okay? So ideally, we would have missed the entry on this. Okay? So what happens is this broke here, it came down, it retested. This is our perfect entry, isn't it? Because then it goes up, and we would be in profit right now, wouldn't we? We'd be in profit. This whole ride would be in profit. All right? So now let's just say we had caught this before this candle ended. I still need my sandwich down there because I would want to know where do I get in at the bottom of the retest. Right? At the bottom of the retest. So hold on. So what am I going to do? Back to my line chart. Right? And now what am I looking for? Those same little indications, but down here now, right? We did it up here. Here's price. We want to look down here, right? So where might price come all the way down to? Well, it could come here. Y'all see that line?
Yes.
It could come there and bounce, but it could come lower,
Right.
right? It
To
could
that
come
one
down
right
to
there.
here,
Mm-hmm.
even, right? So let's say if I, So if I drop a line right here and I look left, let's see what do I find. Look at this,
Yep. Boom. Yep.
Yeah.
right?
Yep.
Last time price came down, it came down to this
It sure
line
did.
and then
It
it
took
bounced
off.
all the way back up
And
there.
it took
Y'all
off.
see that?
Yep.
Okay, so same thing kind of here, right? It came down to the 50% line, but that's kind of like the zone, right?
Mm-hmm.
So okay,
That's the top part of the bread.
right? All right. Then I could say, well, the wick could break through the 50% line, couldn't it?
Right.
Okay. So if the wick breaks through the 50% line, where might it come down to?
Right there.
Down to that line.
Maybe
Right
here.
there.
Right
Because
there.
already you see two of them.
Right? So this one it did it, this one it did it.
Right.
It respected it here and went down. It respected it here and went down. If I look left, it stayed above, it stayed above, it stayed above, it stayed above. Right? So okay. Oh, look.
Boom. Yep.
Perfect. Right?
Mhm.
So you guys see what I'm saying? The market will tell you what's going on if you do the analysis. You don't have to guess.
Mm-hmm.
Okay? So now I'm going back to where current price is. Going back to where current price is. And what am I going to do? I'm going to draw my zone again. Sorry about it.
Did you let me have ice cream?
Yes.
You could never
Okay. All right. Now, that's my zone, right? Everybody agree?
Yep.
There, top to bottom. Okay, great. So now I'm going to go back
Good call,
to
James.
my candles. Now, if you look at that red candle when it went down, didn't it go down in that zone?
It sure did. Touch that
Right?
zone.
It touched the 50% line, but it could have came back down here. So now, if I'm watching this trade and I see this break, I don't enter this trade until I come around over here, the retest. All of this right here, like you could get it on the buy right here, and maybe you have made some pips, possibly. Like it's nothing wrong because it broke and retested here too. You could do that, right? But if I'm looking for the larger move, the uptrend move, I wanna break this line and come down and retest here and go up, right? So now I could have got in down here,
Right.
and now I could ride that thing up.
So, and like in retrospect, that took 3 days to wait.
That could have taken this right here, right? So the 19th to the 22nd, right?
Green here's your sign.
But it's worth it to wait when you know when it trigger. Once you trigger your buy, it doesn't matter. You could have been at the mall somewhere,
Right. Could have bet them all.
and once it triggered, now you're in profit.
So do you see what I'm saying about like now? Let's say I was zoomed in. If I was zoomed in, that might look like a sale, right? Which it could be a sale, but for a scalper, in and out, 5 minutes, 15 minutes, in and out. Why? Because this is not a downtrend potentially. It's a retracement and an uptrend. A retracement is it's going one direction and it corrects itself and then it continues going back where it was going, right? So could you trade the retracement? You could trade the retracement, but there's a phrase that says the trend is your friend, which means that stay away from the retracement, right? If it's an uptrend, you should only be looking for buy opportunities.
So because it's retracing, you would put this in. Like, let's say we're going to execute this now, because now we're going to start going back up. We put this as a buy limit. Isn't the buy,
No,
Is the buy limit the one?
a limit or a stop are orders. A limit says, hold on, Josiah, you get ready to get a look. That's enough. Sit down. Thank you very much. Sit down and drink the high C. No more talking. I'm busy. Okay, so a limit says that the price is going one direction. So
Boomerang.
right, it's turning around. So if we were going in a sale, if we were going down like this, right, and I set in my order to buy, that would have been a buy limit.
Okay.
Because price was currently going down, and I wanted to put in an order for price to go up. So that's a limit.
Right.
A stop is if price is going down and I want it to continue going down. So I would have put in an order for a sale stop, meaning that I think that price is going to continue to go in the direction it's already going in,
Yeah.
right? But now, if you want to just get in right now, there's no order at all. That's market execution,
Okay.
right? So technically, right, let's just say, for example, one could get in market execution right there, right? They could. But me, I wouldn't.
Okay.
Because my strategy is break and retest, which means that now it would need to break this line up,
Before.
come back, retest the line, and then I would get in for the buy. So I would just wait.
That's an exercise of patience.
I was gonna say, because that could be any time tomorrow.
Well, it could. Well, we got this is a 4-hour candle,
Right.
so at least this 4-hour candle, maybe another 4 hours, maybe by the time London session.
Is there
11,
a
12,
way to put on TradingView? Is there a way to put how much time is left on the wick? I saw somebody on the chart they had over there.
Not the time on the wick. It's how
Yeah.
much time for that candle.
I mean, I say wick, I mean candle.
Yeah.
Before the candle is expired. So
Yeah,
it's 2 hours and
2
42
hours and
minutes.
43 minutes before this candle is done. So it's 10. This candle is going to end at 1.
Okay.
So at 1 o'clock in the morning.
1 a.m.
All right. And for most of us, some of us, we still up.
Right. Might be up, might be sleep, right? Whatever. Okay. So See what I'm saying? So now it could come, turn it back red again. It can come back down to retest this zone again. Now, if it comes to, so I could set a buy limit, right? I could say, okay, if it comes back down to 147,783, trigger me for a buy.
Right. Boom.
But if it price don't come back down there, then I'm not in the trade. Okay. I only want to get in if it gets down to my zone. Right? And that's it. So I would either do that or I just wouldn't get in the trade at all.
Because that was because of the retest.
Right. Because we really missed the first retest already.
Bam, right. So now let's retest it for a second time.
So this could come down and retest again. Okay, if it does, great. Then I'll get in. If not, then I won't. So I would just set an order for that and I'll go to sleep.
And live for another trade.
And be done with it. Right? It trigger. If it don't, it don't. Okay, great. And that's it. Now, another thing is this is the RSI, right? This is the relative strength index. I don't use the impact. Oh, this is stochastic, sorry. This is stochastic. The stochastic is showing momentum in the market, right? So who has momentum, right? So the green line represents like the buyers, and the red line represents the sellers. And so whatever line is on top, that's who has the most strength in the market, right? The most momentum. So right now you can see the red is on top. The sellers are winning, right? Like a tug of war, sellers are in the game, right? Now when you get down here below the 20 line, you know, it could be an indication that the buyers are getting ready to turn back around, right? Like over here, right? So when this price cat down right in here, buyers came back in, right? Buyers come in. You get up here, sellers come in. Down here, buyers. Up here, sellers, right? So it's the fluctuation of the market in that way, right? So based on that, based on the strategy, my ideal entry would have been here.
Okay.
Strategy is no retest, no what?
No buy.
No entry.
Or no entry.
No retest.
No entry.
No retest.
No entry.
No entry. So I missed the retest.
No.
So I'm not going to panic and hurry up and try to get in this trade.
Just wait.
I'm going to wait for the retest.
And I think that's what a lot of us do.
Yeah, you get excited. Everybody just jumping in the trade. Like, or somebody might say in the group, oh my goodness, GJ is getting ready to buy. Oh, so you go to your chart and you just hit buy. You haven't looked at any
chart at
what's
all.
the best time to enter the buy. I'm just going to hit buy. And if it goes negative all the way down here, then you don't even know, right? Now, the other thing, the last thing we'll talk about tonight is this, right? So, like, let's say that it comes back down in the zone, right? And I say, enter me at 147,783 for a buy, right? Now, I've got to know that it could potentially come back down to the bottom of my zone, right? So the way that I know how much I'm willing to risk for that is to measure the number of pips, right? So from the top of my zone to the bottom of my zone is 28 pips.
Okay.
So are you willing to go negative 28 pips potentially? Because you might not. But if you did, and you went negative 28 pips, then you need to look at your lot size. Before you enter this trade, what lot size would you be comfortable with if it went the opposite direction?
Right.
Because if it goes negative 30 pips, then if you got $1 lot size,
that's $30.
And it goes negative $30, and you have a $100 account, you sweating.
Yeah.
Right? Versus if you had a 10-cent lot size, and it goes back, it's $2.80, $3, you're not tripping off that.
Right.
Right? You're not tripping off that. So you need to understand that right there. So if it came down here and it potentially went down here first before it went back up, am I okay with about 30 pips negative before I turned around? Or if I just lost 30 pips, would I be okay? If you're okay with $3 being gone out of $100, then go to sleep. Don't worry about it. It'll either hit or it won't. Okay? But if you trying to do $10, if you trying to get rich on this one trade because you want to make $300 on the move, then okay. So your $10 times your 30 pips, that's $300. This is what people are doing. You understand what I'm saying? This is what they're doing, and that don't make Forex risky. That make you risky.
Right.
Because A, you're not patient. B, you don't have any strategy by which you're making any decisions. You're just advertently making decisions with no structure to what you tell your kids. Look both ways before you cross the street. You don't just cross the street. You look both ways first. Why do we tell them that? Because it's less risk. Is crossing the street risky? Yes, if a car is coming.
Right.
It's less risky if there's no car coming. So you need to check to see if it's car coming. Is trading Forex risky? It could be if you go in the wrong direction, but at least check both sides of the street before you get in your trade. So the highest probability is that what? That I'm gonna wait until this, or it might come back down to here. If it doesn't come back down to here, then I'm not gonna worry about that candle right now. I'm gonna worry about that candle once it breaks this line. It breaks that line, it comes back down, and it retests. That's when I'll get in next time.
Okay.
So I would just wait. So I might be watching GJ, right? I might have it on my watch list to just watch GJ.
How do you choose what to watch? Because if you're not really, I mean,
There's no rhyme or reason. You just
Okay.
just choose different. I will tell you this. Because you know that the London session is the most volatile session, then you want to, ideally, you want to start looking at pairs that are European pairs, right? The Great British Pound, all the GBP pairs are going to be doing something during London session, right? GJ, GBP, sorry, GBP, USD, US dollar, GBP, AUD, Australian dollar, right? Anything with the with that, or the euro, right? Euro's a European, so Euro USD, right? Euro JPY, something like that. So if you're going to be trading London session, things like that, look for the pairs that are a match to that session.
Question: how can I see how many pips I have? Like what you just did, how you just found the 28?
Yeah.
How do you measure, like, can you measure that red candle? How many wicks is in that long red
How
candle?
many pips is in this candle?
Or the longest one? Or say the green one, since it's the long. It's the
This
long.
one?
Yes.
Yeah, you can measure how many pips is in that candle.
Wrong way.
Get out of my chair. Between Monty and Josiah. That's why I do it every day. Like, get out of my chair. Okay.
Too close.
We
They
have two
can't see you.
kids.
You gotta step back some so they can see
Okay.
you.
So see, I could say, okay, the top of this candle
Say what's up, Jay.
to the bottom of that one candle is
He's
197
giving y'all a
pips.
little entertainment for halftime.
That's a good.
All right.
Right?
Okay.
Now, if you had $1 going on that, that's $200 in
Yeah.
4 hours. Now, isn't that cool part-time? So you're at work, and at what time of day is this? Hold on. So this candle happened at 1 o'clock in the morning on March the 19th. So while you sleep, you might have set an order, right, for this, and they come in and they go up that many pips. Now the thing is, you have to measure how far you want to go, right? You can't just inadvertently just have a trade going just to be going. So now that's your question, like, where do I do the stop loss? Where do I do it? Okay, so ideally what you want to do is, okay, let's say you're going to start here, okay? The ideal scenario is, okay, maybe the recent high. Because what is an uptrend? Higher highs and higher lows. So you don't know where the next highest high is going to be. But you know that if it's an uptrend, it's going to at least get to the previous high.
Right.
So then you would set your take profit at that previous high level.
and the previous low. Or your stop loss at the previous low.
Correct. Hold on, let me get that out of the way. Right. So I'm gonna put me a green line here. Hold on. Horizontal ray. So let's say, right? Let's say I was gonna get in around here in my zone, right? I would have got in at that point. So the green says 147,728. right? And then my blue, these are just my colors I use, right? So now, so I get in here, and then I would get out, I would set my thing to get out a little bit below that high, right?
Mm-hmm.
If you look left, do you guys see how like this is like a resistance area,
Yeah, if you keep looking further left.
right?
I see it.
So I probably get out right around there, 1.936 up.
Okay.
Now remember, this candle wouldn't have been here yet.
Right.
This is just what I'm assessing. All right. Then I would go and I would measure and I would say, okay, what's the distance between those 2 points? Roughly between where I start and where I finish is 163 pips. Right? That's what I'm expecting. 163 pips. Okay. So if I'm gonna do 163 pips, then all right. Then how much am I willing, if it turns around and goes the wrong way on me, technically what should happen is you want to set your stop loss below the lowest low, right?
Mm-hmm.
Because if it were going to reverse, it would come back past the lowest low,
Right.
right? So you'll put your stop loss here, but there's something called risk to reward, right? So if I put my stop loss down here, the distance between where I started and what I would lose is bigger
Mm-hmm.
than the distance between where I started and where I wanted to end up,
Mm-hmm.
right? So technically, I would want to bring my stop loss up because I always want to I want to lose less than I had the potential to make. Risk to reward, right? I don't want to potentially lose more than I stood to gain,
Right.
right? I want to gain more than I stood to loss. So, now you got to play around with that, right? Okay, well, what was the next low here? Well, then maybe I'll put it here. You see what I'm saying?
Mm-hmm.
Maybe I'll put it right at this point, this 146,161. I might put it here, right? Because that might be about 50-50 or somewhere close in there.
Mm-hmm.
Or I might go a little higher with my take profit or something like that. Why is that water? That's enough, Josiah. You just busy.
Yeah, messing.
Come on.
Because even at a 10-cent lot size,
Go sit down.
at 163 pips, that's still $16.
That's $16 in the middle of the night while you was asleep.
Right, at 1 in the
When's the
morning.
last time you made $16 while you was asleep?
Hmm.
Never.
Not before Forex.
Come on here.
Be careful.
Uh-huh.
It's doing too much. Time for your bath. Go run your bath water. Go run your bath water.
I was wondering who knew how to do
Of course he does. He has to run his own bath water, get in the bed, all that. Go run your bath water this side. Thank you. I had to teach him that stuff early because it's just me and him, right?
Mm-hmm.
And I have things I got to do, so I had to make sure he started learning how to do some of these little things. He can be independent, Now, I make sure I go in there and watch him.
Yeah.
But I know he knows how to run the water. He knows how to get his temperature together. He knows how to take his clothes off. He knows how to get in
They
it.
do that though. That's what I noticed at that age. They love that
Oh, yeah.
independence.
So I let him.
They do.
Good, thank you. Right? So there we go. So that's the gist of entering all the analysis
Okay.
and then getting into the trade and then where to put your stop loss and then where to take your take profit. Right? So ideally you want your you want your stop loss below the lowest low. Why? Because what the market makers know is that the average person is told to put their stop loss like 25 pips, 15 pips below where they get in at, right? They know that. That's what people are being taught. So when you put in these orders and you put in a stop loss, your broker can see your stop losses.
Mm-hmm.
They can see all the stop losses of all the people everywhere. And the majority of the people have 15 pip stop loss, 20, 25 pip stop loss. All they have to do is drop the market down right there, grab your stop loss, take you out the trade, and then go
Turn
right
right
back
back
in the
around.
direction that you were going
For the
in,
real players.
right? That's because they don't understand structure. Structure says below the lowest low. So if your stop loss was down here, even if it did that stupid wick, you're still in the game and you're not hurt.
Right, because you didn't close.
Hey, but you just can't be afraid of the red though either.
Right.
You know what I'm saying? Because you're basing your decision off of technical analysis, not guessing. Does that make sense?
Yes, indeed.
How long does it normally take for you to do one analysis?
Now not long at all. Like I can just come in here. I mean, I can see the trend line, right? I'll draw the fib. That's a 2 second, and I can see my levels. Pop lines in, and I can draw the zones. About 3-4 minutes. 3-4 minutes at that, and I'm looking at a 4-hour chart. So it's not like I gotta hurry up, right? I'm not scalping 5 minutes.
And this is like in the morning. You said you do that on your phone.
Oh, yeah, I'm laying in the bed.
Okay.
I'm using these tools and stuff on my phone because I'm not getting up in the middle of the night because I'm tired, right? So I'm already a little tired, but I get up, like, okay, boom, I'll come and I'll look and I'll draw this stuff up. Now, once this is drawn up, you know, over so many pairs, somebody might send out something for this particular pair, and I already got the trend line, I already got the zones, I already got it. So now when they send out the trade, all I got to look at and see where price is.
That's because that stays there unless you delete it.
Correct.
Okay.
And I can just keep extending this out, right? Like this is all the way over to the 16th of April.
That's right.
Okay.
I don't have to keep changing this. I can leave this. That's why I left it alone.
Okay.
So now I can go out and come back in. This is still right here.
Awesome.
Right? So like if I said I'm gonna keep an eye on this GJ, okay, great. When I get up in the morning, I'll come look at GJ and see where it is in comparison to where the lines and stuff are already at, and then I can decide.
Okay.
Right? So does that make sense? Did that help?
Yeah.
Did that help you, Miss Cassandra?
Yeah.
Any
I know you kind of was
questions
like, oh,
from the
it's a lot.
Facebook Live? Any
but
questions?
I'm giving it to you a lot, not for you to master it a lot, but for you to be aware of what we're saying.
Heck, the potential.
The-
of it,
right?
yeah,
And so if I can give you the whole story, somewhat, then it won't be foreign when we say it again. And then I say it again. And I say it again. Then it's just reinforcing it, and the concepts that you heard, you'll keep hearing them and you'll keep seeing them in use over and over and over and over, versus me not telling you none of that, just giving you one little step. Now you're like, well, what's the next step? Right? So we started from a blank chart and went all the way through entering a trade, take profit, and stop loss. Right? So that break and retest strategy, to me, is one of the most basic. It's like dribble, pass, and shoot. That's the fundamentals of trading.
So we can go from taking 7 minutes to chart up down to 5 minutes to doing a chart, down to 3 minutes to doing a chart.
Yeah.
With practice and repetition.
Right? And then that's it. Now, there's all different types of strategies you can learn. Right? But some strategies are like alley-oop passes. And some strategies are a little bit more fancy. Right? Fine. But if you don't know this, while you're trying to do all of that, you're missing all the basics of what trading is. If you at least know this, then when you're employing other strategies, you'll see that a lot of this still applies to even other strategies.
Okay.
You know what I'm saying? So this is, now see how this is coming down?
Mm-hmm.
See how it's coming down?
Yeah.
This thing could very well hit my zone
And boom.
and boom, go up. Right? Am I still on this trade? Hold on one second.
Any questions from Facebook? Everybody good, cool in the game? And take a snapshot of that right there. You see that? Take a snapshot of that. We'll leave that right there so you can get your snapshots in, because I am a Chairman 100. That's it. Period.
Okay. So
Question.
now I have a take profit. Hold on.
I got a question when you finish.
Yes, sir.
What's the best strategic way to at least make $20 or $40 per trade?
Yeah.
Hold on one second.
$20 to $40 per trade. If you are new to trading, you're not using a lot size more than 0.01.
Now, look what's interesting about this. I just moved the blue line to where my take profit is on my trade. Where's that blue line at? You can't even see it. It's because it's it's right on the bottom of the zone. See the blue line?
Uh-huh.
Yeah, I see it.
Okay. The blue line is at 147,475 technically. But that says, yeah, it says 147,475. That's my take profit point.
For
Right.
this?
For this actual trade. So this trade right here is up $30. Right? I got a 30-cent lot size on it, 0.03. Right?
On a sale?
On a sale. And I got in at 048. 149,048. So somewhere right around this white line.
Somewhere it triggered.
So I've been riding this trade down since this wick up here. Right?
And that's for.
But you see what I'm saying? Like 149,048. Right underneath 04, it's 1 pip.
So that been over 8 hours.
Right? Yeah.
That's what's
Well,
up.
actually, I've been in this trade a while.
Okay.
I got in this trade over here.
Okay.
Okay? Over here. But what did it do? It went all the way up. It did this nonsense.
Mm-hmm.
And then it turned around and came back down.
Mm-hmm.
So I was red all yesterday.
Mm-hmm.
Because I got in the trade on the white line. Right?
Right.
So it went down a little bit. Okay, good. It's like, then it went up. But I knew it had to come back down and retest.
At one point.
At
yeah.
some point,
Right.
when, I don't know. Hopefully sooner than later. Right, that's your idea. But I had 2 positions on this. So my first take profit was right here.
So
And it already hit. Right, and I had a
What did you
second
make- what did
position.
you make off that first one?
On that one, $29.
Nice.
So $30 on that one.
And that was 0.03.
That was 0.03 as well. And this thing look like it's blowing through now, doesn't it? Right?
Mm-hmm. It's on the move.
Because what did it do? It came down, it retested,
Mm-hmm.
right? And look at it, boom. So we're like, okay, we believe it's gonna at least come back down here.
Cut the wood off.
Oh, cut the don't throw outside.
Did you want to address
Check
this?
the water. You better check the water. I'm glad you said that, Mister. She forgot. Come on, hurry up, before. Go check the water.
Andre's question. The
What?
best strategic way to at least make $20 to $40 per trade.
$20 to $40. Well, this trade right now potentially is $31 on a 30-cent.
Show me your, even though you.
See, this is a $100 account, right? Can y'all see that? Oh, I can't. I'm not supposed to be doing all that.
Okay.
I'm not supposed to be doing all that.
Right.
A new
Right.
compliance laws.
Right. But yeah, the best way to do that is follow
So I just
follow your plan.
right. So see, so I had an idea. Okay, so I came in here. and
No financial
so
claims.
The theory between the trade was that it was going to start at this line and come down to the bottom of this zone. That's how the take profit was picked. Right? Right? So I got in up here and I rolled it down to this first level, which is the first take profit. And then we said it's going to ride down to the second level, which is the second take profit. But we believe that the width will probably come down here. Right? Or the price might come down here. Either way. Right? And that's just that.
Cool.
So that's what I was saying about the sale, right? It came down here, so we believe it'll probably go back up, but it's gonna come down and test this zone before it does that. Do you see what I'm saying?
Yep.
It's still gonna go back up, but it potentially could come down in this, so it's gonna retest this line,
Right, 'cause
but
it broke
in the
that line,
sandwich
it gotta
of the
be,
line.
So you're in a sell.
I'm in a
right now.
sell,
So
yeah.
once that your take profit 2 hits,
Yeah, then I'm out the trade.
are you now going to turn around and go into a
I could.
if your analysis is correct, you do all the
Mhm.
retesting,
Uh-huh.
then you would literally, if you see it going back up, you go back in for a buy.
Mm-hmm.
Okay.
Mm-hmm.
Any
Because
other questions,
that's
Facebook?
I'm in an uptrend as it is. I'm already going against the trend, right? The trend is my friend.
Yeah.
So I'm already selling. I'm already in the retracement. But the buy is a much more probable scenario,
Okay.
right?
Okay, because Andre, he asked that question. He said he was new. He
said what?
deposited $50 into his broker's account, and he have a balance of $78 in his account.
Okay.
And he's just saying that he really needs to learn the skill. That's why he asked the question about a $20 or $40.
But here's the thing. Don't focus on the dollars. Focus on getting pips.
Yeah.
You hear that, Trey?
Because the money changes. The money changes based on your lot size. So don't focus on. It's like this: when you're playing football, the first down is about the next 10 yards.
Right.
It's not about how many wins can I get this season. When I'm in the game, I'm just the next play is how many yards. How many yards?
Mm-hmm.
Right? I'm playing a how many yards game.
You're not trying to get 100 yards on one play.
I'm not trying to get 100 yards on one. And I want to win the game, but I win the game by making the proper plays and getting yards.
Right.
I don't win the game by only focusing on just trying to win the game. How do I win the game? By making proper decisions on proper yardage. Sometimes I need to pass the ball because it's better for my yardage, or to go long. Sometimes I need to just hand off to the running back, right? Depending on what's going on. I just need to advance my yardage.
Right.
So here, you're just advancing your pips.
You're not looking for a touchdown on every play.
You're not looking for it. You're trying to, can I get $50? Well, $50 for you would be a touchdown.
Right.
Well, it's not about you getting a touchdown. It's about you getting the first down.
Getting 3 yards.
It's about you advancing the ball.
Past the line of scrimmage.
You understand what I'm saying?
Yeah.
So if you can get
That's a great analogy.
10 pips, 10 pips, 10 pips, 10 pips, then what you're doing is you're enhancing your skill on getting your pips. You're becoming a better trader because you know how to get pips. You're not becoming a better trader because on one trade you happen to leverage $10 that happened to go the right direction and you made $700. That don't make you a good trader. What makes you a good trader is your ability to be consistent with being able to get 20 pips a day. 20 pips a day.
He said he got it.
Then you can increase your lot size. You're going to make more money with the same 20 pips a day.
Right.
I don't got to get more pips. I just need to have a larger account so I can leverage more. But if I'm confident on how I get my 20 pips, I'm confident on going up on my lot sizes. Because I know I can analyze going from here to here, and every time I analyze going from here to here, I'm good. Right? And if I feel confident, then I'll put $10 on it. I'll put $20 on it. I'll put $30 on it, and I'm still only going 10 pips, 20 pips every day. I'm not working harder. I'm doing the same 20 pips every day. I'm just making more. That makes sense?
Oh, yeah.
Does that make sense to Andre?
Yeah, he said he got it. Yep.
You got it? Your goal is pippage. Pippage is the goal. Okay? Not money. Money will increase as your pippage gets more consistent.
No, not tonight, Dre. No harmonic scanner.
No, sir.
Oh, no.
But it's always on that. Did you see my child running around? Jay, really? Andre? Okay. All right. So y'all got this?
Yeah.
Oh, yeah.
Good. Now y'all got a free training. Y'all can PayPal me. Y'all can PayPal me. Y'all can PayPal me $100.
Abundance.
I'm willing to receive. Tracey at TraceyWalkerOnline.com. My PayPal address. Okay, so that's the basics, right? So step 1 is what?
Trend line.
Draw your trend line.
Right.
Step 2 is what?
Trend.
Fib.
Your fibs to find your major levels.
Yeah.
Okay, and then step 3A is what?
Sandwich.
Break and retest.
Break and retest, right? And step 3B is sandwich.
Oh, sandwich.
Like your minor levels to create it. Because you can see it's going to break and retest, but
20
retest
minutes.
where? The range in where it's going to retest potentially. Right?
Y'all got that? Everybody cool in the game? Everybody ready to stack them pips?
And don't say I ain't never gave you nothing.
Yeah.
You
Don't say I
always
ain't
give us
never
something.
gave. I just gave y'all the game right there.
This was an IML TV exclusive.
It was a Tracey TV exclusive. Shoot.
Had nothing to do with IML.
So well,
Yeah.
except for the fact IML taught me this.
Right.
Except for
Right.
that.
She said
IML
she did say
teach
shout
me
out to
this.
Orange. So
Shout out to Orange. Shout out to Christopher Derrick. Shout out to Curtis Cobain Branch. Shout out to Jean-Marc. Because different people taught me different things, right? I'll give y'all. So Orange Wright taught me how to go to the line chart and find those minor levels to create my sandwich, right? Jean-Marc taught me how to measure my zone so that you understand what your lot size should be based on your potential risk, okay?
question.
Chris Derrick taught me how to break and retest to begin with, okay? Yes, sir.
You don't set the take profit with the expectations for it to respect the trend line?
I could, but there's a zone. Do you understand? There's a zone right here, okay? And you have to keep in mind that it broke a level over here. You have to.
So
your
you are
analysis-
respecting the trend line.
It
all the
is,
time.
because what we're saying is that it just could come down. We don't know if it's going to close down there. We just believe it's going to at least come down there and touch at some point.
Even the wick.
The wick, it could still pull up and respect the trend line by closing above the trend line. It could do that. And then turn around and go up.
And as long as the wick, like let's say that was your entry point.
Where?
As long as the wick.
What was my entry point?
Let's just say one of the sandwich, like the rectangular lines that you.
Somewhere in the pink?
Yeah.
Uh-huh.
So let's say if the wick even just touched it,
Mhm.
then it's gonna
It's
trigger.
gonna trigger.
Yeah.
Yep.
Okay.
If I have it set at that price, if price gets there, however it gets there, my trade is triggered.
It don't have to be the candle. It could be the wick.
Well, at the time that it's the wick, it is the candle.
Right, because it didn't close.
It didn't come in.
Right.
The candle
didn't
is
close.
the wick.
Right.
Once it moves off of that price where it is.
Okay.
It leaves the wick. If you think about an airplane has a tailwind, right? So the airplane, it starts back here. Right now it's right here. When the airplane gets here, the smoke is back there.
Mm-hmm.
Got it. Okay.
It was there, but now it's not there.
Okay.
But at a time, it was here. So at the time that the wick was created, because the airplane was right here, but the airplane moved, and the wick is still back there, just to indicate the plane was back there.
Boom. It touched it.
It touched it back there, but now the airplane is over here.
Mm-hmm. Cool.
That make sense?
Yeah.
Okay? All right, guys. So I'm going to turn off of this. Hopefully, my wonderful family and guests got some value tonight.
Yes.
Yes, we did.
Yes, we did.
My child is going on a trip. I don't know where. He is going. Decide where you going.
Where you going, Jay?
Go back to Las
You going-
Vegas.
Where you going, back to Las
He said he
Vegas?
has the bank in here.
You got the bank in there? All right.
This is
So what are you going to do with your money in that bank?
TradingView.com. That's the platform that she broke this down on.
You going to do
TradingView.com.
what?
It is free. You can go to
You gonna go to Las
TradingView.com.
Vegas with it?
You
And
can
what
get the
you gonna
app,
do with
or
it
you
in
can just
Las
go
Vegas?
right to the website, and you can put any pair
You
you
go on
want
our
to in
room?
there, and you
And
can
then
chart
what
it
you
up
gonna
the same way that she just did. And this is the 4-hour chart that she had
Trade
used
it,
to break
yes,
it down.
that's my pocket. Good job, baby. He said he gonna trade it in our room in Las Vegas.
That's what's
Because we're
up.
not going to no casino, are we?
Walk right past him.
Bar pass, okay. He knows what to do with his money. That's right. All right. So y'all, thanks for tuning in. Peace out. We gotta go to bed. We got art project to do because we got Japanese International Day.
Yeah, and I'm going to Las Vegas.
No, we're not going to Las Vegas again.
All right,
Oh, he said he's
Facebook.
just pretending. That's
Oh.
correct.
Oh,
That's
okay.
correct.
All right, Facebook.
All right,
We
love
gone.
y'all. Peace out.